You're listening to the Máté podcast, and welcome to a brand new episode with your host, Roy. Every week on this show, we learn and unlearn about one aspect of the crypto world. I know, stepping into this brave new world full of tech jargon and financial stuff can be overwhelming. But fear not, I'm here to take that load off your shoulders. Imagine me as that friend who does all that heavy lifting for you by decoding the crypto space while you relax with ease. In this episode, we are going to be talking about DeFi, and we have a very special guest to take you through it. Let me introduce Yu Liu, who is the founder and CEO of Dbond, a blockchain-based Web3 solution for decentralized bonds and derivatives. Previously, he has founded Swap Helper and Grab Finance. He is a master in sociology and finance at Paris Dauphine University. In parallel to his studies, he has been pursuing his passion for finance and more particularly for decentralized finance. Yu is a math and cryptography enthusiast. When he isn't rocking those numbers, he enjoys movies and photography. Yu, thank you so much for joining us, and I really appreciate you taking the time out for this interview.
Thank you. Nice to meet you.
We also have Mátyás, who is the media manager at Dbond. He is a PhD candidate specializing in the international economy. Thanks, Máté, for joining in today as well.
Thank you so much for having me too on your show. It's great. I love it, and I'm learning so much from you.
And while you guys are listening to this, I would really appreciate it if you leave a review and feedback on my website, themetaroi.com. If you're new to this show, do hit that follow button on Apple Podcasts, Spotify, or any platform of your choice, and stay connected with me on Twitter or Instagram to be notified about new episodes. Before we start though, just a quick disclaimer. The following content is informational only and none of it should be interpreted as financial advice. So please do your own due diligence before making any moves in the crypto space. With that out of the way, let's get started. Yu, can you take us through your background and your experience with Web 3.0 and the crypto space?
Hello, nice to meet you guys. My name is Yu. I'm from Paris, and I'm working on a DeFi project which is called Dbond. And this Dbond can guarantee a certain amount of insurance in DeFi, which is not present right now. So we believe our solutions will be the future for the whole DeFi system, because it's much more stable and much more efficient than the current DeFi solutions. So that is basically myself and a little bit about the company. So we are based in Paris, and we are 12 in-house team members in Paris. The project is nearly finished, so we are hopefully going to launch it as soon as possible.
Great. Máté, can you introduce yourself as well on this podcast?
So I also come from a social science background. I did international relations during my undergrad back in my native Hungary. And I also did a little bit of studying during my undergrad in the United Kingdom. And after that, I decided that I wanted to do something more global. So I went for public administration in China, which is a very interesting place to study public administration. And I also did an exchange to the United States. And after that, I was like, I want to learn more. I still don't understand how society works, and I want to learn something that is related to economics. So I shifted towards political economy by doing a PhD once again in Hungary. And this one is about media economics. And this is where I discovered how important transparency is and how important trust is in a society. I'm sure you are all aware of how the media landscape has changed with a lot of fake news, misinformation, disinformation. And I am finishing this PhD, which is about Hungary's media system. And I decided that, I don't want to stay in academia, and I want to do something that is more meaningful than writing a lot of pages, which nobody will eventually read. And this is how I ended up choosing the crypto sphere. You and I met completely by mistake, we could say. I was just looking for a job here in Paris, where I moved for personal reasons. And here I am, and this is a fascinating journey for me. And this is how we met, Roy.
Great. So many people you in our audience are actually just getting started with DeFi and the Web3 space in general. So, and now we know about your expertise in DeFi. Can you actually explain it to us, like what DeFi is and how it is actually different from what traditional finance is, what we are used to?
So DeFi actually is a shorter term for decentralized finance, which means that the technology is built on top of the infrastructures of blockchain that can provide a certain amount of the transparencies to otherwise very centralized traditional finance. So basically, DeFi promise to give a transparent and efficient system to operate any kind of financial transactions. And this technology is built on top of the blockchain, so nobody can alter it, and it's decentralized, meaning that nobody owns the ownership of the protocol.
So many people have actually raised this concern that a lot of things in DeFi have actually been very technical in nature. So, for example, many DeFi users, and I'm sure including yourself, have been facing the fear of investing in crypto and DeFi, like for reasons such as, is my principal safe? Why should I pay those high transaction fees? Is there slippage or interest rates are questionable? So can you talk about those problems which currently existing in DeFi?
Yes, of course. So basically, like every single new technology, at the earlier stage, there will be a lot of problems that the developers try to solve before it becomes some kind of a standard. So it's the same for DeFi. From the start, DeFi is not very efficient, and because of the current yield farming system, you may suffer impermanent or permanent loss. What we can do, of course, is try to build a new system and try to help people to build a more stable system. By doing so, we believe that DeFi will be more efficient in the future. And how we are going to do this is, in a technical sense, is we are going to, let's say, update the current existing AMM system, automated market makers, and we use a system which is called APM, which is more efficient and, of course, more stable in nature.
Can you throw some light on what exactly impermanent loss is and how the new system is actually going to deal with this problem?
Yes. So we can give a very concrete example. So basically, you are a user and you have, let's say, 10 Ethereum in your hand, and you want to generate some kind of yield interest. So you go to a newly released protocol. Let's say it's called Sushi, and you find out that you can get interest by adding liquidity for their liquidity pool. So basically, the idea is that for the traditional AMM system, you need two tokens, which is a pair, and you need them in, let's say, 50-50 percentage in order to add the liquidity. So what you can do is you use 5 of your Ethereum and bought corresponding amount of Sushi from the liquidity pool, and then you put the Sushi and the Ethereum into the pool directly. So hopefully you can generate some interest. Let's say at that day, they promise 10% of the interest return after 1 month. And you believed in that because it seems normal. And if bank promises some interest, I will receive the interest. So you put your money in, and after 20 days, you find out that the price of Sushi is jumping dramatically. So which means that you are not only lost all the interest you have been promised, you are not losing your principles, because the Ethereum you can get out will be less, and the Sushi you get out will be, the value will be, let's say, almost nothing. So that's why the DeFi has these problems. It's because when the market is not doing well, the big investors, they have, let's say, the first news, the first information, they will leave the market before everyone else. So they will pull out all their liquidity, sell all their token, and then it's the retail investors who will suffer most of the losses. So that's basically why the system is very volatile, and that is why the system is not friendly for retail investors. And how we are going to do this? Like I said, the APM need only one token, which you provide to the liquidity pool, and we will mint according amount of our own token into the pool. So basically, you don't need to sell your own token and purchase our token in order to add liquidity. So when the interest is generated, it will be expressed in the form of a bond, and use this bond at the time of redemption. You can use your bond to redeem the interest with your principal. So it's the same principle. So basically, it's like a national bond. You will purchase a bond today at the price 100, for example. Maybe 1 year later, the bond value will be 110. So at that date, you can use your bond to redeem the interest with your principal. In our system, you will receive this kind of bond, and on that bond, there are different kind of interest rate, different kind of risk levels. So if you purchase a prime bond with a lower risk and maybe lower interest as well, you will be guaranteed to get your money back and get your interest back. On the other hand, if you prefer more interest rate and you can withstand more risk, you can choose a lower rated bond, which is promising a great amount of interest, but also more risk. So basically, the system is built on a contract. So it's the contract who is trading on the market. It's not a simple ERC20 token. So that is basically why we can do better and the existing system can't.
Great. I think it is important to understand at this point that how people have been used to traditional finance, right? So there have been stock markets, there have been bond markets, and now with crypto coming in, there's obviously a crypto market. So
yes,
people who are more risk averse, they generally prefer investing in bonds. People with a lot of capital, they do not usually go all into the stock market because of the volatility, right? So obviously a protocol like this, like how you have developed at Dbond, obviously it gives a lot of security to the investor who is actually going with the Dbond, and with that he also gets the flexibility to trade it in the market. Is my understanding about this correct?
Yeah, so basically it's like a tier system. So the traditional investors and people who hold a lot of capitals, they prefer the safest way possible because they can't lose any money. Because their principal is huge, so even though the interest rate is a little bit lower, they can accept it. So that is basically the targeted audience of our prime bond, which is fixed rate. And of course, so let's say if the pool generated 200% of interest per year, let's say if it's a bullish market, and the people who purchase the prime bond, the fixed rate bond, those with like say risk reverse, they will only receive 10% as promised in the bond. But the rest of the interest will be given to the people who purchase the subprime bond, which is more volatile, more risky, but more rewarding in some sense. So basically, the system uses the same pool and find two kind of different audience and build most adaptive solutions for them. So that's why we believe the protocol will be more, let's say, involved than the current AMM system, because it's the same LP token for every single users, and you have no commitment in the, let's say, in the protocols.
Yeah, it sounds like a wonderful idea. Let's talk about how did you come together as a team? What was the story of the founding team? And how did you all arrive at this idea?
So basically, like I said, I'm studying in Paris Dauphine. It was, let's say, a financial and administrative school in Paris. And there I met my friend, Songbo, who is a math student at that time. So basically, we are both interested in finance, cryptography, and anything related to numbers. So we discussed about why the DeFi is not working, and our conclusion is that because DeFi don't have, let's say, in traditional finance, you have M0, M1, M2, which means that most of the liquidity is locked in somewhere. In traditional finance, it's in bond, either national bond, fiat bond, or some kind of bond issued by a big institution. So that's basically why the fiat can be less volatile, because this system. So what we want to search is in DeFi how to build the same system, and we find out that it's impossible using the existing structures, such as ERC20, or maybe NFT standard. It's impossible. So what we do first, we invented a new standard, which called ERC 3475, which will be used for the issuing and the redemption of all the bonds. So people can find a solution with more complex data structures and more dimension in it. So the developers of other DeFi projects, they can have more control over their liquidity pool, and also for the users, they have more insurance in their investment.
So as you mentioned, this is ERC 3475 protocol, which was not existing earlier. So you actually coded the protocol from scratch and you built it up from scratch. So how was the process of doing that? Like, how difficult was that process?
So like I said, I have background in finance and maybe mathematics and statistics. And also Songbo, my earlier friend, is, let's say, in the same domain. So we don't have very profound knowledge in computer science. But the first alpha version is developed by myself because I have already some experience in DeFi, in Solidity, and I created also 2 DeFi projects before. So basically, I have the competence to create the first version, which is developed on Solidity. So we can recruit new team members. And back then, we meet a third co-founder, Varun, who has some knowledge in blockchain technology and have a doctorate degree in cryptography. So basically, the design is mainly by myself and some mathematical parts by Songbo. But right now, we have a team of 12. So 5 of them are engineers. So it's a very tech competent team, and we are rebuilding the structure to make it more efficient and less baggy. So that's why I think the protocol will be successfully launched, because they have enough resources to invest in production and enough resources invest into auditing. So we will be sure that this time the contract will be stable and will be easy to use.
So can you tell us about what are the other collaterals or what are the other digital assets that can be securitized using Dbond?
So basically the idea is that you can securitize every single bond. So it's like a Uniswap. You can create a pair for every single token. But of course, we will have a whitelist of the bond that we think is much safer and could have a higher rating and more insurance. So basically, of course, it will be firstly the bond we issued, and you can use a list of collaterals such as SUSI, YFI, Bitcoin, USDC, USDT, all those stablecoins, and the important, let's say, DeFi farming protocols, native tokens. So that is the first part, and it's our own, let's say, financial product, our own bond. But if the market are doing well, everyone can have any kind of bond, and they can have the bond in their own ways, choose their own securitized asset, and they can put the bond on our first market and our secondary market, and we'll have a rating system to give to them that the level of insurance and interest rate we think is relevant according to what they promise. So that's it's the whole system is an open system. So it's not we decide which token can be used as collaterals. We can only decide for our own bond. But for all the other, let's say, competitors, they can choose their own list and they can find their own solutions.
Can NFTs be added to the Dbond as well?
Yeah, of course. So NFT as well. So basically, any digital assets can be used as collaterals, and the NFT can be used as collaterals. And we have a system to fragmenting our packaging NFTs into a package or into fragment. So NFT can be a collateral, but of course, for our own financial product, only a whitelisted NFT project will be considered. Of course, again, you can have your own protocols and have all the NFT listed on your whitelist. It's possible.
So, Máté, from your point of view, from a non-technical standpoint, how do you see Dbond impacting the crypto space?
Sure. My approach to the entire crypto sphere and decentralized finance is that it has a very important, a revolutionary message of financial freedom. And Yu doesn't like to talk about this because he thinks that this is way too much of a promise. But coming from this political economy and social science background that I have, I hold this for the most important message and the most important mission that DeFi has. And I believe that Dbond has this aspect. It's taking DeFi to the next level. And sometimes we say that this is the new standard for decentralized finance, because I can back this up. In my perspective, the divergence point of view towards DeFi is that it looks very promising. It looks very, very technical and very lucrative at sometimes. But when I hear about debacles like Luna's and a lot of other instances when people lost a lot of money, I, as a risk-averse user, I know this about myself, I am very afraid of investing into this sphere. And I myself have a little bit of money to put aside, and I'm thinking about investments and bonds. I have actually already invested into bonds in Hungary when I had a little bit of money that I have saved. So I know it's a pretty safe investment. The Hungarian government actually promises a little bit of premium on their own bonds. So I thought, well, this is good business. This is a good investment. And I wanted to do that. I did that. Dbond is promising this in the DeFi space, which has not been available so far. There are these staking methodologies that I am just learning about, but at the same time, it's very difficult to understand how to actually get to that point when you are staking crypto assets. How do you get crypto in the first place? What is a wallet, etc., etc.? And Dbond is trying to simplify that process to begin with, and to actually have that instrument, have decentralized bonds on the blockchain. It's something new, and it's something that is more trustworthy. So to shorten this very long explanation and answer that I've got, in my point of view, it's bringing more stability and more trustworthiness into the sphere. And this is why I joined in the first place, because this is a mission that I can subscribe to.
So can you take us through the process of investing through Dbond? Like, if I'm a retail investor, what is the process that I should follow, and how do I learn about it?
Yeah, so basically, what our front end and our interface is just like the traditional DeFi product. You can see that with which kind of token, you can get how much percentage of the interest rate. And you choose one product that suits your, let's say, risk profiles, and the interest rate is satisfying for you. So you choose that product, and you can just purchase the bond with your tokens, and also after the transaction, you will receive a bond in your wallet. Basically, the idea is that you purchase a bond, like you give money to a central bank and you get a national bond, and all that bond is specified at this date, you will receive this amount of money. So you can use this bond and wait, let's say 1 year or 6 months, 2 months, anytime you want. And at that date on the bond, you can redeem your bond and get the promised amount of the token back. So that is the whole system. But let's say before the time of redemption, before the time of maturity, you want to sell your bond because you need money in very urgent circumstances. So what you can do is you can sell the bond on a secondary market. And this secondary market is also decentralized and built by ourselves. So that is truly the new concept in DeFi, because earlier on, LP token, which represents the collaterals you have in the pool, is not tradable because the data structure, again, that I said, is less competent. So using our new standard, you can literally trade your LP token, and the LP token have a secondary market to guarantee its value. So that's another advantage of our protocols. You have also a speculative market on bond and on the secondary market. So that's basically why our bond can be more efficient.
Got it. So this is obviously, you're talking about a retail scenario, right? How is the process different for, let's say, a business or an investment bank to looking to invest in Dbond?
So most of the DeFi projects, they have those institutional investors or big investors with the retail investors. They are investing in the same product and get the same reward with the same rule. So this is not good because the retail investors will be in some kind of disadvantage against those institutional investors. Because like I said, they will receive the news first and they will withdraw their money and sell all the tokens they have. So in order to prevent it, the best way is to first build a pool with all kinds of collaterals and then use this pool to create some kind of bond. So the bond represents the percentage you own in this pool. Use this system, you can have a tiered ranking system for the bond. There are prime bond and subprime bond. Prime bond, like I said, is safer. It promises a fixed amount of return in interest. And of course, the interest rate is much lower. So the big institutions, they prefer safety, will purchase those bonds and keep it. And of course, the retail investors, most of them, they will prefer, let's say, more risk and higher reward. So they can purchase the lower rating bond, which is more volatile. So using this system, basically the same pool will be separated in two. And one is for the institutional investors, get what they want. And one is for the retail investors, get what they want. And the interest rate for both of the two different choices is modified by algorithm that ensure that the liquidity pool has enough liquidity and can give most of the interest to the retail investors. That's basically the idea about this system.
Got it. Another question that comes to my mind is, obviously in the financial industry, there are a lot of regulations and checks and balances that have been put in, right? So what is the regulatory implication of investing in Dbond? Can you throw some light on that?
Yeah. So like I always said, if there is a new technology, the legislation is always a little bit late than the real development of the technology. So what we can say is that our project is just like another DeFi project. It's just like Uniswap, just like SushiSwap, PancakeSwap, anyone you can name it. Basically, it's the same system. We are not pretending ourselves to be the issuer of bond. So that's why the company is named Dbond. So the product we're issuing is just another cryptography-based product and built with a string of numbers. And it's just like another kind of digital asset, which is also a string of numbers. So basically, that's why we say that the regulation issues will be less relevant for now, because firstly, the market is small. And also, of course, we are not the first and we are not the last who, let's say, build a DeFi project and try to advance the process.
Got it. So, as you said, there are other DeFi projects in this space. So, what are some of the comparable solutions that you have seen in your experience, which are resembling or similarly working towards the goal that you are working towards?
So, when I think about this question, there are two names that I know that will have some relevance in this area. So basically, the first is Olympus DAO, which is protocol they claim themselves as the issuer of bond. So basically, it's the same system, but because they are using the ERC20 token standard, so the bond is not tradable. And because of this, there are no secondary market. And they don't have a tiered system, which means that everyone purchases the same bond. So it's basically just like you lock your LP pool for a certain period. It's exactly the same thing. So what we can do better, of course, is all that secondary market and floating interest rate and tier system. And the second one I know is called Soul Protocols. It's a Chinese-based team who developed it. And they are using some kind of system which called financial NFTs. So basically, it's an NFT token. And on that NFT token, you have some metadata. And they say that with this NFT and all those metadata, you can get some kind of token at which date. So it's kind of like a bond. But again, it's not tradable on secondary market. And the volatilities of the bond is not insured by the system that we built. So basically, that is the two most similar protocols that I know who build a similar product like ours, the Dbond.
What is the future expansion plans of Dbond? Which are the other markets you are trying to target, or is there any other product you are trying to come up with?
Yeah, so basically, I think if you want to build something, let's say that can change a system, you need to first do something yourself and make people look at you and see the result of your invention. So basically, we firstly will be only working in DeFi with all those DeFi users and traditional DeFi institutions. Once we get enough user base, both B part and both C part, we will have enough resources and user base to discuss with those really important investors like Blackstone, like SoftBank, all those investors who we talked before. But what they said is that they will only aim for a project that has much higher valuation. So what we can do is that we work with DeFi and in DeFi first. And once we gather enough user base and enough valuation, we can really discuss with those top investment institutions. So if one day they want to issue a bond, a part of those bonds can be put onto our market and we can sell it on blockchain. And our users, common users, you and me, will be able to purchase those bonds, which is off limit in the earlier system, which is fully centralized. So that could be a good solution because, like I said, the DeFi, I believe, maybe it's not the future, but it will truly influence the existing economic system because the current ones is not transparent and the 2008 can happen again and again. So it's a vicious circle that we need to find a solution.
Absolutely. A lot of people have been asking this question that there is so much fraud in crypto, for example. A lot of people have been creating scams, rug pulls. How do you convince the audience that you're targeting that this is a legitimate protocol, this is a legitimate asset they can invest in?
Yes, of course. I think the first thing people need to look at is if the project they want to invest has an auditing report. That is the most important part. And they can only trust those very important, let's say, auditing companies, such as Paxos, such as Slowmist, and a lot of them. So the problem is there are some DeFi projects is get audited, but they can rug pull as well, because like you know that most of the DeFi projects they are aiming for make let's say quick money. So what you want to see a DeFi project is this project has some kind of technology which is innovative, and they don't claim something very big, and they don't explain how they can make it happen. So the bad protocols, the bad project, they promise something huge, but they can't say how they are going to achieve it. The good ones, they say something small and important, but they have a better solution, which will be expressed in their white paper. So you can just go look at their white papers. If you see only some kind of one words, some kind of like I say, we will give transparency and liberty for all. This is not a good project. But if on their white paper, you can find a lot of mathematical, let's say, functions, formulas, and a lot of explanations how this work in a logical sense, this will be a good project. And if you check all those successful projects with highest TLL, curve protocols, Uniswaps, Aave, for example, they all follow the same path. So the technology is most important than DeFi. If you bought the token of, let's say, a normal, let's say, or maybe a less relevant DeFi project, you may earn money, but in the long term, you will surely lose all your principles. So that I suggest is to find the protocols who has a really strong background in technologies and also have some solutions already. It's not a promise. You should not trust a promise. You should only trust what is certain and concrete.
Absolutely. I think I went through your white paper personally, and even though I didn't get most of it, I'm not a math major, but I understood that there is a background to it. There is a thought behind it. There is a statistical inference and a significance to every calculation that has been made, right? So I think it's a very interesting protocol, a very interesting project, and I would love to see how it pans out. So do you want to offer some kind of incentive for people who want to try out our platform? Is there some sort of program like that?
Yes, for sure. Because we have, firstly, we have airdrop, and we have whitelisting, and we have minting of NFTs. So all those things will be only accessible at earlier stage by the, let's say, the people who is in our community. So we will starting our airdrops and all those other PR companies after we will receive our auditing report. Will be possibly receiving them in 2 weeks or 3. So after this, we will announce the airdrop, the date of releasing of our protocols, and also the listing of it. So that's why I think at being an earlier bird, you have some advantage. And the airdrop offers around $50 to $200 as returns. And the NFTs, you have a huge discount in the minting. So basically, the whitelisting and the airdrop will be offered to everyone who will be participate in our activities of the communities.
So where are you announcing this airdrop? Where can I go and sign up for it?
So the airdrop will be on our own site, and when it will start, we will announce it in our Telegram group, and also on Twitter and all other social medias. Of course, we will also publish some media release to announce this news. And of course, we will be announcing that we will start our next round of fundraising, and also when will be the listing of our token.
Great. And for people who want to check out that airdrop, all the links are in the description. Their website, their Twitter handles, everything in the description. You should definitely go and check that out. And I would personally want to invest in this platform. It seems like a really useful way of using my crypto, using my NFTs, and maybe getting some stable returns out of it, especially in a very volatile world where cryptos like Terra Luna and all are crashing like anything. So I think it's a very right solution that we have in place, and I'm really excited to check that out. On that note, can you tell us what is your vision for the crypto industry? Where do you actually see the crypto industry going in general? What do you think? How should people structure out their investments? What do you think of all that?
As everyone can see, right now in crypto, the market is not doing well. So for most of the time, when the market is not doing well, it's the financial product who provides safety and provide insurance will be more popular. So in that sense, bond will be a good solution if the market is not doing well. So I believe Dbond has a huge market in the future when the market is not bullish anymore. And that's basically the first vision of our protocols. And then, of course, after the user base and we have enough liquidity in our pool, we can really build the bridge between the traditional financial institutions and the retail DeFi investors. And that will be a huge advantage for DeFi, and it will be a very important step for DeFi. Without it, DeFi and the traditional finance will always be separated system, and no recognition of both parties will be important. So that's why I believe that the future is some kind of mixture of the traditional finance and DeFi. And this is the same solution for most of the DeFi companies and traditional financial companies.
Máté, I would love to know your vision for the Dbond protocol. What are the other areas that you have been exploring? And how do you see Dbond impacting those areas?
Sure. Dbond is looking into a lot of things. Well, for now, of course, we are focusing on the airdrop and the NFT release, but surely we have longer term projects and ideas for ourselves. And the most important thing is that it's right in the name. It's Dbond, decentralized bonds. This is the main product. This is something that we really want to put on the table for people to use. But it's not the only thing that we are thinking about. A whole range of other products will be possible once we launch this protocol and it takes off. So we are planning to make available other financial instruments such as options, swaps, futures, and forwards that are so technical financially that even myself have a hard time understanding them sometimes. But sure, this is our first project, the Dbond, and then taking this further. And as you mentioned, that we really want to be a bridge between traditional finance and decentralized finance. We don't think that one should replace the other or one is inherently more trustworthy than the other. Of course, DeFi has blockchain technology behind itself, which is permissionless and more transparent. And we believe that this sphere has a lot to offer for the traditional financial sphere. So exactly as you put it, this would be a mixture of the two, and we would shift Dbond in two opposite ways, actually. One thing is that we would make it more decentralized, because right now we are pretty centralized, working here in Paris, a team. I think this is necessary when you are developing a new project. It's very difficult to manage a team across the globe of independent developers, and I think this is the good approach to have to work out the basics of the project in a centralized manner, and then shift it towards a DAO. But an opposite way is that it's not just a DAO, but we would marry it to the traditional financial sphere, have more banks and traditional financial institutions come onto our platform and use it. I think it would be beneficial for traditional finance too. And that's ultimately what I believe is blockchain about, because it would introduce much needed transparency towards in today's financial infrastructure. That's ultimately what I think Dbond will be doing in the future. But this will be a long journey for us, probably 5 or 10 years from now.
Great. And I would personally request everybody to go to dbond.org, check out the white paper, check out the team. They are fully doxed. And I have a lot of personal belief in this project. So I urge everybody in my audience to go and check that out. Link is again in the description. On that note, thank you so much. Thank you, and thank you, Máté, for joining us today. And this was a great session. It was a very insightful and a very educational session for our viewers and our listeners. Thank you so much for elaborating your protocol, and we wish you all the best for your success of your airdrop. Thank you so much.